Hello and welcome to myfinanceteacher.org. Today I want to present a Q1 update on the fundamental valuation of three of the largest gold miners in the world. That's Newmont, Barrick and Agnico Eagle. With gold price declining by around 6% over the last month or so, perhaps it's not a bad idea to have a look at the valuation of those miners and see if they are becoming more attractive given the expectations for gold price. And we are going to talk about gold price expectations as well as a range of other factors. So the valuation factors I look at is of course gold price, where we're going to look at three scenarios. We'll look at reserves and resources in the ground, as well as the cost of extracting those reserves. We subtract company debts, taxes, and we look at the per share value after taking into account the time value of money. And I look at insider shares as well, which help to align the objectives of the management with those of the shareholders. So generally I look at the discounted per share value after all-in sustaining costs, long-term debts and taxes. And as for the gold price scenarios, we're going to have a look at three scenarios. Optimistic plugs in the gold price of $2,200. To be honest, over the next perhaps a couple of years, I would expect gold price to be perhaps significantly higher than this $2,200. But even in our optimistic scenario, we try not to be overly optimistic, perhaps leaning a little bit more conservative in either of the scenarios. More on that in a minute. Our balanced scenario plugs in the gold price of $1,900 per ounce, and our conservative scenario plugs in the gold price of $1,600 per ounce. So that's a scenario which shows you the risks of investing into these established miners if gold price just drops out of bed here. Looking at what the miners have in the ground, all three do hold some gold, silver and copper reserves, and I apply the gold-silver ratio of 75 and copper to silver ratio of 7. Looking at the proven and probable reserves of gold, we see that Newmont has significantly more than the other two miners, with 94 million ounces for Newmont, 75 million ounces for Barrick and nearly 48 million ounces for Agnico Eagle. Looking at the resources, that's M&I resources, or measured and indicated resources, without including any of the inferred, never mind any more potential exploration success in the future. So M&I resources are significantly higher for Barrick at 104 million ounces, followed by 75 million ounces in Newmont and 44 million ounces in Agnico Eagle. The same situation is for silver. Reserves are highest with Newmont, resources are highest with Barrick. And again, the same is true for copper. Again, copper reserves are highest for Newmont at 15.7 billion pounds. 11.9 billion pounds for Barrick aren't that much far below Newmont. And Agnico Eagle has some significantly lower values at 0.2 billion pounds of copper. For copper resources, again, Barrick is higher at 32 billion pounds versus nearly 18 billion pounds for Newmont. Moving on to all-in sustaining costs, long-term debts and taxes. For several years, if you go back through some of the older videos on my YouTube channel, I have been applying a 20% tax, simply because I don't want to spend too much time going into the details of taxation of different miners. Now though, I bump it up a little bit to 25% tax. This increases our caution in valuation significantly, again, echoing that lean towards the conservative valuation in either of the scenarios I mentioned a minute ago. For all-in sustaining costs, they are somewhat similar at $1,200 for Newmont, $1,210 for Barrick, and $1,165 for Agnico Eagle. These numbers are unchanged from our recent video looking at the results of 2022. For long-term debt, though, we do have some changes. Long-term debts have decreased a little bit for Newmont and Barrick, whereas for Agnico Eagle, the long-term debt has increased somewhat noticeably. Next, moving on to number of shares outstanding and discounting, I'm going to apply a discount rate of 5%. Mining industry is somewhat risky though, so if you think a higher discount rate is appropriate, let me know down in the comments below. For shares outstanding, the numbers are unchanged for Newmont and Barrick at 795 million shares outstanding and 1.76 billion shares outstanding for Barrick. Insider shares are unchanged for Newmont and increased a little bit for Barrick, which is a positive sign, again, strengthening that alignment between the management and the shareholders. And for Agnico Eagle, number of shares outstanding has increased noticeably again up to 494 million shares, which isn't that great. Of course, anybody would dislike dilution, however mild it is. The percentage of shares held by insiders has declined as well. Reserve and resource life is unchanged. In general, the reserves of all of these miners are expected to last for anywhere between 14 and 18 years. If you add half of the M&I resources, the mine life is extended to anywhere between 21 to 31 years for these top 3 miners. Next, moving on to the most interesting part of the video, the scenario valuations, starting with a conservative scenario where we plug in the gold price of only $1,600 and we look at the value of only proven and probable reserves in the ground without any of the M&I, never mind inferred resources. And again, what we'll look at is the discounted per share value after all-in sustaining costs, long-term debts and taxes. Plugging in the numbers gives us around $29.40 for Newmont, around $9.60 for Barrick, and just under $20 for Agnico Eagle. Next, moving on to the balanced scenario, we plug in the gold price of $1,900, and even in our balanced scenario, we only look at the value of proven and probable reserves in the ground, again, excluding any of the M&I, never mind inferred resources. That gives us a valuation of $54.25 for Newmont, nearly $18 for Barrick, and $35.41 for Agnico Eagle. Comparing these balanced scenario valuations to the actual market price, the price is lower for Newmont and Barrick, whereas the market price for Agnico Eagle is somewhat higher than our balanced valuation. Perhaps the market sees something that I don't see for Agnico Eagle, so it looks like I'm slightly more cautious on Agnico versus the market. If you are aware of any positive, interesting drivers upcoming in case of Agnico Eagle, again, let me know down in the comments below. Lastly though, looking at the optimistic valuation, we're going to plug in the gold price of $2,200 and look at the value of proven and probable reserves, as well as only half of measured and indicated resources, never mind any of the inferred resources or any future exploration success. In this case, the discounted per share value after all-in sustaining costs, long-term debts and taxes gives us just over $100 for Newmont, just over $39 for Barrick, and a little bit under $66 for Agnico Eagle. All these numbers for these top 3 miners and more were already presented to the members at myfinanceteacher.org back in the second half of May. I will post updates on more miners soon, but for more timely information and to support my work, consider joining us at myfinanceteacher.org, where we'll look at a range of assets as shown by these categories, and perhaps one of the most interesting categories is this juniors in metals, which might provide you that additional torque if gold prices finally and convincingly break out of this triple top around 2100. That's all for now. Before you go, hit that like button and share this video with your friends. Have a nice day. Bye bye.